Hello, everybody. Welcome back to another episode of NFA Live. And as always, I'm joined by Guy and Ben. Gentlemen, thanks for coming by. I appreciate you. How you doing, Guy? How you doing, Ben?
I'm good, thanks, Rob. It's good to be back with you gents again.
Yes.
Doing great.
Ben, I see you're wearing an ominous shirt in the red department. I don't know if that's going to signify anything or what's going on.
I'm pretty proud. We launched these sufficiently erect shirts 8 days before Ethereum hit its low.
So everybody, if you're looking to rub it in, go over to Ben's site or go over to Ben's YouTube channel. Check out the merch, and of course, if you're not following Guy and or Ben, I think you definitely should do that. So, gentlemen, we got a lot of things to go over, so let's just jump right into it. So first things first, we need to talk about this little thing. First of all, that's our heat map right now for what's going on in the crypto digital asset space. And if we take a look at price action, which I think people sometimes do, is that we can see that, and this is denominated into Bitcoin. Right now, it's kind of like a hodgepodge mix of what's happening over the 1 hour, 24/7 day, and 30-day. Let me refresh this real quick just to make sure I get the right accurate. This is in dollars. Hold on. That currency, Bitcoin. Let's see how things are going. So we see, again, a little bit of a hodgepodge of different action. Ethereum is doing okay over 30 days, 200 days, probably not so great. BNB, Solana, Dogecoin. But in the last 24 hours, we see a lot of red or bleeding against Bitcoin. Dominance, I actually leave this up when I do my streams. We can see that there was actually a decline, but a nice sharp uptick in the last 24, 36 hours. Fell below 60% to 59.82, I think it was. Now we're at 61%. Now, also, we've got the M2 money supply going up, and that is in the US and global. And a funny thing, if you shift this forward about 12 months or so, the M2 global money supply and the Bitcoin price matches up pretty evenly. So the question I have is as such. So dominance is down, M2 is up. This seems like a repeat of at least the last cycle. And the question I have is, it seemed like this kind of keeps going on as far as like from Q2 to Q4. We have a nice fat rally roughly around Q2, then Q3 comes in. Then it looks like we might bottom out or go lower until we have a big rally into Q4, which everybody's waiting to October, November. So the question I have is this going to keep happening? Or are we going to fall victim to the next big narrative, like what Michael Saylor is saying, which is there's no more winter, Bitcoin up only? Ben, I don't know if you've heard about this Bitcoin dominance, but I'll start with you. It's a very loaded question, I understand, but take us through the nuances if you could.
Yeah, let me share my screen. I can't even remember how to do this. It's been so long. How
long has it been? Guy said like 3 weeks.
Yeah, I don't know. I think for me it's been about a month. I think.
True.
Yeah, probably about 3 weeks, but yeah, almost a month. For dominance, I sort of think it's more or less just doing what it did last year. Every time it rallies up to one of these new fib levels, every time it's hit one, it gets rejected temporarily, and then it kind of like drops immediately, and then it sort of like recovers and then continues higher. I do think that ETH has bottomed against Bitcoin this cycle, but the reason why you still might see a surge by dominance, let's call it starting by late August at the latest, is because I still think that altcoins collectively will, like, liquidity from altcoins, I think, is still going to flow back to Bitcoin, by like September, October timeframe. And I wonder if it's just going to do something like what it did in 2017. You can see a low was found by altcoins on their Bitcoin pairs in the summer, and then they rallied for a few weeks to late August, and then they dropped all the way down to 0.25 by late October, early November. So I could see something very similar happening where, you know, that doesn't mean that the altcoin rally against Bitcoin right now is over. Right now, it's coming up against that 50-week moving average, which, you know, sometimes does provide resistance. Other times we've seen it pop through temporarily, but my base case is that liquidity will make its way back into Bitcoin from the altcoin market around, you know, sort of like the August, September, October timeframe. And during that time, I think that ETH will likely put in a higher low on its Bitcoin pair. So what's really interesting is you see this tiny little pullback by Ethereum on its Bitcoin pair, like that little drop by ETH. That drop by Ethereum on its Bitcoin pair made altcoins go to a lower low. Even though ETH was at a higher low, altcoins went to a lower low on their Bitcoin pairs. So I think that's going to happen again. I think the next higher low for ETH on its Bitcoin pair, you know, in a couple of months or so, will likely correspond to a lower low on all Bitcoin pairs. And so for Bitcoin dominance, you know, whether the top is in or not, to me, really just depends on how high is the next higher low by ETH Bitcoin, because there does exist this scenario where Bitcoin dominance rallies and alts go to lower lows on their Bitcoin pairs, but because ETH Bitcoin maybe goes to a higher low, you know, maybe dominance doesn't go that much higher, right?
Right.
Or maybe, you know, maybe it just does something like this, where it just kind of sweeps the high, something like that, where it sweeps it very briefly, and then the market turns back. But that's kind of my thought process right now about altcoins on their Bitcoin pairs, and Bitcoin dominance. I mean, this 60% level was a big milestone for Bitcoin dominance to pass back in November. So I mean, it kind of makes sense that it's bouncing a little bit here. The other thing too is if you look at the RSI of Bitcoin dominance on the weekly time frame, this is more or less like where it bounced in that same type of drop last year, right? So, you know, I know everyone keeps calling for alt season and whatnot, where dominance collapses, but I do believe the most likely outcome is that alts bleed against Bitcoin and Ethereum, you know, especially kind of like that August, September, October timeframe, especially against Bitcoin. And they've already, you know, we've talked about alts bleeding to Bitcoin for years, but the reality is now they're also bleeding to Ethereum. You know, look at this chart. Altcoins, since Ethereum went to the regression band, altcoins are down, you know, 42% against ETH. So, you know, I think a lot of people, when you think about like the nuance of what's going on, they'll buy a lot of altcoins, and then they'll pat themselves on the back for them going up, you know, 20-30%. But in fact, they're down collectively about 42% against Ethereum. So it's basically the same argument that we made for Bitcoin dominance for 4 years. Like, you know, Bitcoin is going to outperform most altcoins, so make sure your portfolio is Bitcoin heavy. Now you're seeing altcoins also underperform Ethereum, and we've seen that happen many, many times. In fact, this drop right here looks a lot like this one right here in 2017, where it ended up bottoming out at around 1.4 or so, and right now it's around 1.9. So yeah, I think that Bitcoin dominance will likely see a little bit more upside by late August, September, October timeframe. Between now and then, though, I wouldn't really be that surprised to see altcoins, you know, kind of do what they've done, where after they get like a big rally, they might get a down week, but it doesn't mean they can't surge back up for a little bit before the market, you know, fully goes back to Bitcoin. And as far as what I know, there was a loaded question, right? You also asked about what Saylor said.
Yeah.
I mean, I think I've been fairly consistent at this point. I mean, I think what Saylor did, I think that the big issue for probably 2026 is just all the copycat sailors, you know, the people that are coming in really late and sort of copying his strategy with a lot of leverage, and their cost basis is going to be a lot higher. So I mean, like, I don't think it doesn't have to be as bad. I mean, we've had diminishing returns, we've also had diminishing losses, but I would expect some type of pullback in 2026, right? 2026 seems kind of like the right year for that. Just kind of like 2022, 2018, and 2014. Every midterm year, it seems like it's the same thing.
Yeah. Just a quick follow-up on that one. And I know people say, well, that doesn't make any sense because there's so many institutions, there's so many sovereign nations, there's the current administration, the SEC, the OCC, the CFTC, everything's behind Bitcoin. There shouldn't be a drop-off. But I remember hearing the same things in 2021. Of course, obviously it's vastly different, I understand, but there's always a black swan event around the corner. So maybe we don't get the 70, 86% drop-offs. Maybe we get the 30% or 40%. But it's just a quick, what?
I was gonna say, yeah. But again, the pullback could come from a higher price, right? It doesn't. There could still be further upside, and then you do get a drawdown, but it's from a higher Bitcoin price somewhere out right now, right? So a lot of times when you talk about drawdowns, people always think about, well, drawdown from from what price, right? 70% drawdown from here is a lot different than had we had a 70% drawdown from 73K back in April, or if we go up another 50% and have a 70% drawdown from that.
Perfect. Yeah, I can definitely see that. This is why I like this show. Because I'm biased. I like both you guys, but Ben just set us up for, okay, this is what potentially could happen. And now, Guy, you're here to help us out with the second part. Which comes first, the chicken or the egg? Which is, okay, if we have that type of movement happen in the next 2-3 months or so, how do you play this? And what's going on? Because you had I should probably add this in. You had a couple of different things talking about Ethereum. And you said here, according to 10x Research, ETH Whales have begun looping staked ETH into Aave to borrow more ETH and take on leverage. As these whales have begun to unwind positions, this has led to a large queue, causing concerns it could drive ETH lower. On top of that, you talked about how the validator are exiting, just hit an 18-month high with over 644 ETH. Is this profit-taking rotation? Is this going to go even lower? So how would you, first of all, you can answer any of the other parts of the question, but how do you play this going into Q4? Because it's looking at that maybe Ethereum, even though we have a lot of the big institutions like Fundstrat, a couple other different companies going, we're going to put this onto our balance sheet. Do you continue to accumulate that? Or do you just say, you know what, I'm just going to wait for it to go lower based on these different things that you're talking about?
It's a good question. I think, well, a couple of things to clarify there. Firstly, I think that validator queue that mentioned in the tweet there, that could be as a result of because the Pectra upgrade from earlier this year means that the minimum stake, the maximum stake has gone from 32 ETH to just the minimum stake from 32 ETH to 2,048 ETH. Which is a big jump in anyone's book. So what that exit could be, what that exit queue could be, is validators unstaking in order to consolidate their holdings into larger stakes. So that might be all that is. It could of course be profit taking as well, because let's face it, lots of people have been underwater ETH for so long. I think there's probably that temptation now that we've had a pump to maybe get out and look to either keep it in stables or rotate into Bitcoin or even alts. So I think that's an important caveat. That might not be as bad as it sounds, or
right.
It could. So that's important to bear in mind. In terms of how you play this, I guess the coming months, it's a tricky one, because I think most people, well, anyone who's watched this show and has sort of followed our lead to an extent, will probably already be quite heavy in Bitcoin, and I think that's that as Ben has proved many times, that is a good place to be, and there are still a lot of us holding ETH as well. I personally wouldn't be looking to buy any more of those, but I would now, and I am now, looking more at alts that interest me in terms, in anticipation of. I hesitate to use the word Altseason because I think that's so 2021. But I think that's from past cycles. But in anticipation of a sort of general market melt up, which I think will be good for alts in general, but it's going to be much harder to pick winners this time round. So that's where picking strong fundamentals and possibly, I think, being willing to rotate. I mean, I think this is a big part of where we are, not necessarily in this cycle, but as an industry at the moment. There are so many options out there. There are so many different coins or tokens you can go for, and it's dizzying. And I think I've certainly moved from more of a buy and hold stance to, okay, maybe I need to think about what is going to be the next hot thing. Is, for instance, do I rotate my SOL into hype, for instance, because you could argue that there seems to be a strong trend towards hyperliquid being, the Solana of this cycle. And if you miss the big pump, if you miss any God candles on Solana, given what we've been through over the last year or so, that might be your last opportunity for that. So I'm trying to be a little bit more nimble in terms of where I take profits and where I reallocate, because I just don't think that attention is going to stick around for long enough on most alts for the previous sort of buy and hold to be effective across the board.
Yeah, well said. So this is what makes this all different, right? So I think for Ben, I think mostly Ben is hitting up Bitcoin because he's like, why even take the risk? Risk versus reward, maybe probably getting a little bit of Ethereum. Guy, looks like you're a little bit, I know you're heavy into Bitcoin, like all three of us, but then you're looking at a little more alts. And I'm in the same level. But I look at these types of things and I think to myself, okay, yeah, I always like to look at this as like a VC. And I say, okay, well, if I go heavy into Bitcoin, which is what I've done, and if I just pick up a couple of alts that are going to do pretty well, great. I don't need them all to pop off. I just need one to pop off. And I think I'll be pretty happy with that. So 75, 80% for me. I think Guy probably around the same thing. I think Ben is mostly, Ben, I'm going to guess Bitcoin, Ethereum. That's pretty much the main draw.
Yeah, I think just Bitcoin and Ethereum, because I think Bitcoin and Ethereum, it's blue chip dominance now, right, baby? Like, it's blue chip.
Hey, have you ever, I mean, I'm sure you've done this, but I think it's on one of your videos, Ethereum dominance. I think we're at 11% and was it going up? Or
Yeah,
is that something you can look at?
Yeah, and the low for Ethereum dominance that it just hit in April, it was basically the same that it bottomed at in 2019. So I think it makes sense to be bullish on ETH against Bitcoin, but I think it's still, but I still think alts are going to bleed against both Bitcoin and Ethereum. But I'm not talking about your alt.
Yeah, we're not talking about anybody's alt. This is not your alt. Just talking about random, who knows alts that are out there. All right,
somebody else's alts.
Yeah, exactly, Guy. Somebody else's alts. Hey, speaking of somebody else's, let's get into the next piece, which is Jerome Powell. And it looks like there's been a pretty heavy campaign against Jerome, the Fed chair. And I have to ask the question, right, which is this. I mean, I personally think Jerome Powell did a pretty good job. I know some people hate him for, because Trump says he's awful. But let's be honest. I mean, as far as like inflation, I mean, he did put us from 9%, and we're still above or below 3%. Unemployment level, I mean, remember back here in the coronavirus? I don't know if you heard about it. It was a big thing. And then now we're looking at an unemployment rate of 4.1%. We're not in a depression. We're not in a recession. Should Jerome Powell get the hate that he has, or do he do a good job? Guy, what do you got?
Yeah, I think, I mean, I think it's really interesting to see what we're seeing at the moment with Trump stirring this up, against Powell, because I mean, it's basically calling into question the independence of the Fed, isn't it?
True.
And that is that has the potential to be absolutely huge, because I mean, the Fed currently is independent as much as it can be under the circumstances. And I think if Powell was replaced, or if Powell stepped aside, then I think we would see inflation expectations go through the roof. And of course, we know how much inflation expectations actually drive inflation itself. And of course, the Fed only controls short-term interest rates. Inflation, expectations are going to have a much, a much more pronounced effect on the economy. And I kind of think, okay, a lot of people are pissed off with Powell in that he's kept rates high for so long, which, to be fair, he said he would do. I mean, he said at one point he was just reciting the phrase "higher for longer," if I remember right. It was this is what he said he'd do, and it, as you said, Rob, it has worked by and large. The U.S. economy is still strong, so I kind of feel if it ain't broke, don't fix it. But of course, Trump wants something different, and there's a whole other debate about central bank independence as well. I know there's a lot of people. The Bank of England is similar. The Bank of England has only been independent for about 25 years, maybe a little longer. And there are plenty of voices who say that it shouldn't be independent, and that's a big old debate we won't get into here. But because if Powell is pushed aside and Trump's man is crowbarred in, then how independent is the Fed? And what does that mean for the markets? And like I say, I think that means that inflation expectations will go up, and whoever is there will kind of find themselves having to deal with the same thing that Powell dealt with, but will perhaps be in the much more tricky situation of having the president breathing down their neck and basically saying, no, keep rates low, or whatever it is. Powell had a horrible job to do, but he did it. And I agree with you. I think he did it well.
Yeah, I mean, that's kind of the way I'm leaning into it. But I ask you guys because I'm looking for a different opinion. Maybe I'm missing something. Ben, it's the same thing with you. Jerome Powell is being pushed to lower the rates, but it looks like any other central banks, they are lowering rates, and it's not. And Powell's the one holdout. I mean, the United States is a little bit different, but do I miss something as far as like the hate that Powell is getting? Should he actually be lowering rates at this point?
I think some of the look, first of all, a lot of people say that Powell was responsible for inflation in the first place, and the Federal Reserve certainly had some effect, right? I mean, they should have. We can criticize people, I mean, everyone makes mistakes, right? Everyone makes mistakes. And the fact is they should have raised rates a lot sooner than they did. So they did contribute to inflation getting to where it was, low rates and whatnot. But I also don't remember anyone complaining about low rates in 2021. In fact, that's what Trump wanted in 2020, right? When he was president. Obviously, Biden was president in 2021, but when he was president, they all wanted lower rates, right? They wanted lower rates. So if you have rates at like 0, which is effectively where they were, and you have money printing like crazy, which is what they did, then you're going to have high inflation. But that's not the only thing that caused high inflation. Powell's not the one who sent out stimulus checks to everyone in the nation, basically. And he's also not the one who was the one providing all these loans to all these businesses, a lot of which were misused, right? And there's a lot of lawsuits today about all these businesses that took on these loans that was fraud. Also, Powell is not the one responsible for the lockdowns, right? He's not the one that went on TV and said that no one can fly into the country anymore and that all these businesses have to shut down. Like, he's not the one who did that. So the blame for inflation, while it is partially on the Federal Reserve, it's everyone in the world. I mean, all the governments of the world, all the central banks of the world, they're all responsible. And again, in 2020 and 2021, no one was complaining about it, And then we got into 2022, and it was clear that they should have raised rates. Like, Powell should have raised rates. He probably should have raised rates a year before he did, right? He probably should have raised rates in like mid-2021 instead of waiting until March of 2022. So I think he does deserve some criticism for that, for waiting too long. But ever since he started raising rates, I feel like he's done the right thing, right? And there's a common, and I'm going to get into trouble for saying this, but listen, there's always a lot of people that'll say that Powell only lowered rates to help, the Democrats in the election. But keep in mind this: while Biden was president, rates went from 0% to 4.5%, right? 0 to 4.5. And they cut 50 basis points, you know, a month before the election or 2 months before the election. But, you know, it takes a long time for rates to be filtered through to the economy. So there's no way that that was necessarily felt. And furthermore, those rate cuts hurt the real estate industry because it sent mortgage rates higher. So they cut, you know, and also, by the way, in 2019, when Trump was president, Powell cut 3 times, you know. So I feel like what he's doing is has been justified. And they've also explained several times for the people sitting in the back of the classroom who can't understand this. They've said several times that had it not been for the tariffs, they probably would have already cut rates again. But that they're worried about what that might cause. Now, who knows? But the point is ever since Liberation Day in April, headline inflation has gone up, right? It was at 2.3 and then 2.4 and then 2.7. It has nothing to do with where it is specifically, the absolute level. It's the direction that it's going, right? And so back then when they cut, it was right after the unemployment rate had spiked to 4.3%. If you guys remember that in the summer of 2024, the unemployment rate spiked. The SOM rule recession indicator that everyone was talking about back then triggered. People were worried about a recession and they cut rates. And now you don't have that, right? You have rising inflation and the unemployment rate has been flat for a year. The unemployment rate in June of 2025 is the same as the unemployment rate in June of 2024. So, and here's the thing, if everyone who's you know, if you're following this economy and you're saying it's such a great economy, then why do we need rate cuts? Because in strong economies, the Fed normally raises rates, not cuts them. So I feel like people want to have it both ways, right? They want to say it's a really strong economy and getting stronger because of all these new policies, but they're also screaming that we have to have rate cuts. But you can't have both, right? I mean, it's like pick one or the other. It's either a weakening economy and we need rate cuts, or it's a strengthening economy and we need rate hikes. But a lot of people want to say it's a stronger economy and getting stronger, and we also need rate cuts to save the real estate market, without realizing that when they cut rates last time, it actually made the real estate market even worse. So those are my views. I think Powell, ever since 2022, has made the right decisions. I think since 2022 he's made the right decisions. I think that he should have cut rates, or he should have raised rates earlier than he did. But ever since then, I think he's done what needed to be done. And I mean, I'm guessing they're going to cut rates again at some point relatively soon. But yeah, those are my thoughts.
Those are good thoughts. Well, this will be a follow-up question for both of you. Since we see that the economy is doing so well, and we talk about how great the economy is, and there's actually a bit of an increase in inflation, not just stagnation and not cutting rates, but should we do a 25 basis point increase?
I don't think we need an increase. I don't think we do now. I think, honestly, I think the right decision for July is to hold rates where they are. And if the next data, like if the next couple of months of data, if we see the unemployment rate start to go up a little, and if we see inflation go down a little, then I think, you know, they certainly would likely cut in September or the meeting after that. But I think there's also a chance that inflation kind of continues to go up for a little while, and I think that's going to make them a little hesitant to want to cut too much. It doesn't mean they're not going to give us another 25 basis points, but I don't think they're going to in July, and I don't think they're I think the earliest would probably be September.
I say rate hikes. Guy, what do you think?
I guess I mean I guess it goes with the data, doesn't it? And that's what Powell and the Fed have been saying, like a broken record for, you know, for as long as anyone can remember now. We will go with what the data says. So yeah, you know, if inflation does start ticking back up again, then that's something they've got on the table. And I guess that's an important part of what it means to have an independent central bank, because under those circumstances, you know, that would I guess be the sensible thing to do. But you can imagine that would go down like a fart at a funeral in certain quarters if you tried to raise rates, even if even if the data pointed in the direct, saying that was probably the right thing to do. And of course, it is worth pointing out as well, Powell is just one member of the FOMC. The whole FOMC votes on it. He's obviously the chair, and I do think I agree with Ben that he's done a good job with perhaps maybe should have raised rates sooner. But other than that, has done really well. But of course, if he was to walk away and Trump was to get his person in, then that person would presumably have to wrangle all the other members of the FOMC to thinking their way. Now, some members are more dovish, some members are more hawkish. So. It's perhaps something that it could be done to get a majority. But I think if rates needed to go up, if that's what the data said, then I kind of feel that Powell would want to do that and take take as much of the rest of the committee with him as possible.
I could be completely wrong, but I think that Trump is not going. I mean, maybe I'll eat my words in like a week, but I don't think Trump's going to fire Powell. I think he needs everyone doing what they're doing now, tweeting out that Powell should resign, and he's screwing everything up as kind of like a safety net in case there is a downturn in the economy at some point in the next year or two. He can blame Powell. If he fires him and he replaces him with his own person who's going to just do his bidding, and anything bad happens, he can't blame Powell, right? And I think what he's doing is he's setting the stage now to blame Powell if things fall apart.
Maybe that's a little 4D chess, or maybe it's checkers. I don't know. One of those two things.
It would make sense though, wouldn't it? It's like set up someone as a potential fall guy, so if things go wrong, you can literally go, "It was him," and I've been saying it all along. Why did nobody listen?
It seems like that's the obvious thing, Like if there's a downturn in the midterm year, he can blame Powell.
Yeah, and it makes sense. And then we just go, hey, look, everybody needs a scapegoat. That is the truth. That's how it is. And we'll get to that in the alien story in a bit. But we'll finish this up, which is, it's just a piggyback on the last question, which is, so we've seen some pretty big gains, right, in of course, Bitcoin and also some of the altcoin markets. So I guess this is a twofold question. What concerns you most about moving into Q4? And I have to ask it, what is the most concern for you, yourself personally, and what's your biggest concern for the people that watch you or your subscribers? Because it's two different things. So are you worried about, round tripping your bags? Are you worried about the scammers? Are you worried about the next narrative, which is, of course, super cycle and blah, blah, blah? What concerns you and what concerns the people that you talk to or your subs? Guy, I'd like to start with you on this one.
Sure. I think as far as I'm concerned, the things that worry me most, personally, are probably complacency. Prices. Let's say we see this market melt up. Let's say we see Altseason or something like it. Prices start going bananas and complacency kicks in. It's like, this time is different. Yeah, super cycle, up only. There can be no bear market. It's like, it's amazing how easy it is to sort of trip that switch and suddenly be like, just totally lose your mind. So that worries me, personally, and also just for the rest of the market, because, I think that it is so easy to see that just grip the, the space, the industry, very quickly and very tightly. And then, I guess greed would be the other thing on my part, which basically means round tripping, being like, well, I've set this price target. I promised myself I was going to exit here, but it might go up even more. So I've made that mistake before. And like I've said many times, I really don't want to make that mistake again. So I'm going to, I really want to be a bit, not necessarily less greedy, but more manage my greed in a better way. And then in terms of for everyone watching, we're in this really interesting and very privileged position of being, of doing what we do and have people listen to us and our opinions, and in a lot of cases hang on not every word we say maybe, but a lot of it. And that is, that's a really exciting position to be in, but also kind of scary as well, because you want to you want to manage expectations. You know, you want to be like, look, this is amazing. I think, you know, I think the market is looking really strong here, or I think this particular project is looking really strong here.
Right.
But look, I don't have a crystal ball. I don't know. All I can give you is my best educated guess, and you know, the filtered through the educated guesses of all the people I'm lucky enough to work with. But I don't know, and like I really try and sort of manage people's expectations in that regard. It's like, yes, things are looking good, but for God's sake, you know, try not to get carried away. You know, set realistic goals for yourself and try and stick to them. Because you know, you just don't, you want everyone to kind of make it out of this alive, and you know that a lot of people won't, so to speak. So yeah, managing expectations.
Very nice. I like that. Those responses. Ben, same thing with you. What's your concern for yourself, and what's going on in the cryptoverse, and about the people that actually watch you, the subs?
Yeah, I mean, I guess for new, I think you know, whenever prices go up like they have been, it always leads to an influx of a lot of new people into crypto. And normally what happens kind of around the end of the post-halving year, early part of the midterm year, you see altcoins start to outperform Bitcoin and by a lot, right? And so I guess, you know, one thing that's going to be difficult is whenever that phase happens, it might be difficult convincing new people that that's not the norm. You know, like think about the last 4 years and how long it took people to really get on the Bitcoin dominance train and realize the importance of it. I mean, if we see something similar happen again, I don't know if I have it in me to go to you know, to convince another class of that. So I'm a little worried about that. But also, I mean, like that, and also too, like, you know, when the markets do, you know, as the markets go up and you take profits, right? If you're just sort of DCAing out, you know, there's going to be a lot of people that are always going to scream for the price to go higher. And just remember that no one knows, including all three of us. Like, no one knows where the market's going to top. No one has a crystal ball. And I keep reminding myself, like, you have to forgive yourself for not being able to predict the future, you know, about how markets are going to go. And so, yeah, like I think just people need to have a plan. They need to stick to it. They need to not let the narrative get in the way of what they had previously decided to do. You know, for instance, like Ethereum went home, right? And I've sort of flipped my bias on it, and I'm now bullish on ETH against Bitcoin. But I also don't want, you know, to just let that cloud my judgment of things and not kind of miss obvious things. The other thing I think that might start to happen, not immediately, but maybe within a couple 2 to 3 years, is I'm really starting to worry about you know, the security of a lot of jobs with all the advances I've seen with AI. Like, I mean, like AI today is just getting so incredibly, it's just amazing, like what it can do. And like, if you look at some of the new code stuff coming out with Claude and you know, just like the amount of work you can get done, like one person sitting in their living room is basically with AI tools is now equivalent to like a 20 to 30 person company like 3 years ago, right? Like the amount of work that one person can now get done, which is great, and it's exciting, and it means there's a lot of opportunity out, right? There's a ton of opportunity for people to build businesses right now and create really great things, right? If you're tired of losing in the markets, if you have lost in the markets, one of the ways is build a business, right? And AI provides so many great examples of that. But whenever we've kind of reached our limit on that, which I don't know, who knows when that exactly is, there's probably going to be a lot of job losses. So that kind of has me worried. I would say for some time over the next 3 to 4 years, I think that's going to be a really strong narrative that we're going to be sort of grappling with, and maybe even our jobs are not secure. Like AI versions of ourselves will be much better at navigating markets and talking about markets than we are. So yeah, I wonder. I really, it's exciting to know what to know that the future is so unknown, but it's a little it's a little makes me a little anxious, like wondering how things are going to change over the next like 5 years.
Oh, that's great responses all the way around. I will just say, like with AI, they're definitely going to replace us. They're going to replace a ton of jobs out there. So I think the people that are you watching the video right now, it's a good thing that you're investing into your future right now, because imagine the people that aren't. Imagine the people that aren't buying these assets and what they're going to do later on. Because I got to tell you, a lot of these jobs, I mean, I still think the manual labor jobs are going to be safe until, you know, we have Optimus come out from Tesla and take over those types of jobs. But if not, it's going to be pretty awful. And then just look at like where people are right now. I just saw a report as far as the unemployment level for the new graduates has been skyrocketing because they can't find jobs. And then you'll also take a look at the mortgage rates, like Ben talked about and Guy talked about. 2020, I think the average house was around 280, 290,000. Now we're at 430,000 plus the actual problem that we have as far as like the interest rates that are going on there. So the people I can just talk about the United States. They can't even own a piece of the United States anymore. They just have to rely on renting. I think it's a dangerous situation. So congratulations, everybody, for investing into your future and buying these assets, because if not, it'd be a pretty scary place. Although not as scary as, say, aliens coming. I picked this up from Ben on Twitter, and he says, this is what people are demanding. Congressman Frost is claiming the White House is preparing to release concrete evidence of extraterrestrial life. And I was like, I knew it. I knew it the whole time. I knew this was happening. And then unfortunately, as I dug into it, huh? What's that?
I said, didn't it get community noted?
They get community noted. I'm like, damn it. Frost aliens comment was in response to a Wall Street Journal report regarding Donald Trump's name being in the Epstein files, an apparent sarcastic joke and not an official statement on extraterrestrial life. I'm like, God dang, I thought for sure I had it. Anyhow, I was pretty pumped for the aliens, but I guess we're just gonna have to come for the Epstein list, which should hopefully be released, even though I don't think it's gonna be. Any thoughts on this Epstein list or aliens before we get to the Q&A? Let me know. This is for Guy or Ben.
Look, you know, going back to what Ben was saying about AI, you know, AI taking people's jobs and stuff, it reminds me of a point that that was raised when we were researching a video that we're working on at the moment that talks about AI. And it's like there's this idea that, you know, most governments, I think, are agreed that you need economic growth. You know, we need to grow economies. And how do you grow an economy? You know, it's largely by consumption. You need people consuming. You know, you need people buying the products that are made elsewhere and what have you. And, you know, the thing is that if you replace, how do you do that? You know, how do you get people consuming? How do you up consumption and therefore productivity? You put money in people's pockets and then they buy things and, you know, and then they can make more things and what have you. The thing is, you know, robots don't consume. So if you've got AI doing everyone's jobs, you know, not, you know, you're sort of, how are you going to get economic growth via consumption, you know? And that made me think, well, maybe this is what, you know, maybe this is just the right moment for aliens to come in and open up that whole new economic front for us. You know, we've pretty much run ourselves into the ground trying to trade with each other on Earth. So if we can start trading with another species from another star system, you know, maybe that's the shot in the arm that that the global economy will need.
Guy, we're already doing that. That's going on in the North Pole. Just no one wants to talk about it, but that's a whole nother video for later. All right, everybody. So unless Ben wants to talk about aliens, that will conclude the whole part about for NFA Live. We'll go into a little Q&A, and then we'll get out of here for like the next 5 or 10 minutes or so, and then we'll get out of here because these guys are busy, got a lot of things going on. So what are your questions? And was there any questions that you guys saw in the chat? Because so far it's nothing but a bunch of comments about aliens. Let's see. Nice pool. Optimus is garbage. China's far more advanced. Hey, earnings report came out for different companies. I'm thinking Tesla didn't do so hot.
Their cash flow, I think, was a lot lower than what people had forecasted. And that's, yeah, I mean, Tesla's down like 8% today. But still, I think I would long-term be bullish on Elon Musk. He's going to hit some road bumps here and there. But I feel like I've met a lot more people that have made money betting on Elon, and I've met more people that have lost money shorting his companies.
That's
But
right.
isn't that the really difficult question to answer though, Ben? Because like, yes, I agree with you. I think Elon Musk is a very smart guy and knows how to make money. But like, how do you? What's he going to make money on? Like, until recently, it was the obvious answer would have been Tesla. And lots of people have made lots of money, but that seems to be really struggling now. So is the Elon Musk bet, is it to try and get into SpaceX? I know they're doing tokenized SpaceX stocks now, or via some of his other companies. It seems to me like Elon Musk is the bet, but which direction do you go in?
All of them, I think. I mean, Tesla has struggled, but it also had a massive rally in 2020, 2021. My guess is it's going to go sideways for the next couple of years. I like last business cycle near the end of it, and then go up a lot, later on. I think Tesla, there's a lot of loyal people to that brand. And I think, I think we sort of pulled forward a lot of returns for a while, and it's going to take a while to continue to grow. But I mean, there's going to be a lot of there'll be a lot of new developments. I mean, one of the things like the sort of the robo taxi. They've talked about. I know he keeps moving the goalpost on this, but like one of the things was like if you have a Tesla, kind of using it like as a taxi for just kind of sending it out. But he kind of keeps kicking the can down the road on that. But I mean, imagine if we got to a point where like if you own a Tesla, you can just say, all right, go be a taxi for a few hours.
It will be, it's, and I think he even said that the Tesla robotaxis are going to be able to service half of the American population. And I thought to myself, and just what you guys just talked about as far as AI and taking jobs, imagine everybody from Uber and Lyft and how many jobs are gone there. And the reason is AI just took over, and then off you go. Sorry to say it, but it's a good thing that everybody here is investing into hard assets, and the hardest asset would be Bitcoin. But I guess one of the questions that are coming in, taking profits. And I think this is a good question because of of course, big players and smart money. How do you take profits? Do you take those profits and then stick them into cash? What do you do with that cash? Or do you put them into stable coins, let them sit there for everything to drop and then go back in? How do you guys personally do it?
At the moment, when I mean, I have taken a little bit of profit here and there. I've been moving it into stable coins because I am interested in some of the yield opportunities that are cropping up now. Obviously, last cycle that was a thing, and that didn't go so well. But I'm kind of confident that this cycle we're going to see, that we are seeing improved protocols, and when you factor in things like stablecoin legislation, things like the Genius Act, et cetera, I think there's going to be a lot of opportunities there. That said, I wouldn't hold everything in stables. I mean, I would go to cash, depending if there was something I wanted to buy. I mean, I like to have a cash cushion, so as if something goes wrong, if I accidentally burn the house down, then we've got some sort of recourse there. But generally, I don't really like holding cash because I always think of Michael Saylor's sitting on an ice cube analogy. Stablecoins seem to be the best in terms of holding something relatively safe, in terms of getting a yield. But I would, a lot of the time, I would look to eventually rotate it back into Bitcoin.
Hey, Ben, before you answer, Guy, could you guys do me a favor, and then everybody who's actually having this question, could you guys do a video on that, as far as like yield for stable coins, the different offerings that are out there? Because I don't feel comfortable with that, and I would like to have you and your machine that is Coin Bureau take a look at all those different projects. If you could.
I'll speak to. I think that would be an interesting one. I mean, look, a lot of it is really degenerate stuff. Like if you go on crypto Twitter, there are people like yield farming, cycling between all these new protocols and getting insane levels of yield and really kind of farming it out. And that was a big thing in the last cycle as well. Things like Yearn Finance and whatever. But that's not the sort of yields I chase. I'm looking, I consider anything about, anything around sort of 7% upwards to be pretty decent. Certainly a lot better than you'd get from your bank. And yeah, there do seem to be a lot of opportunities there.
Sounds good to me. Thanks. Ben, how do you, first of all, I know you're probably not taking profits, but if you did, would it just be cash, stable coins, or something else?
I think if you're selling alts, you either go to ETH or Bitcoin, because they're gonna bleed. I think they're gonna bleed against Ethereum, and they're probably gonna bleed against Bitcoin at least for one more phase of this cycle. So I think if you sell alts back to Ethereum, if you don't like ETH, because you got disenfranchised with it while it bled to Bitcoin for 4 years, then you just go straight back to Bitcoin. There is, normally if I sell Bitcoin, I would go to either stablecoins or cash or gold. Gold is another somewhat decent option. Sometimes I'll sell crypto and put it into like index funds, because even in bear markets for crypto, the stock market normally doesn't fall as much. So just putting it into index funds can be a good play. If you let's say you make a lot of money on an altcoin and you want to stay invested in something, but you don't know what, if you're expecting a big pullback in crypto, then just kind of putting it in index funds or gold, I think, is a good way to go. Because normally in midterm years, gold and the S&P outperform crypto, and that would be next year. So in about 6 months, I think that would be a good play. There could still be time if you're super heavy into Bitcoin and you want to get some ETH. I had some people reach out and they're like, oh man, I missed the boat. ETH is at 0.03. I was sitting there like, man, like 2 years ago, when no one even would believe that ETH could go to 0.03 on its Bitcoin pair. Like no one even believed it could go that low. And now that it's rallied back up to 0.03, everyone feels like they missed the boat. And I mean, it just goes to show you just how like our minds work sometimes, where like we only focus on what just happened and not the fact that 0.03, given where it's been, it's still relatively low. Doesn't mean there's not going to be another pullback. I think there probably will be another higher low, but if you wanted to take on that risk, that can be justified. I think more so now than at any other point this cycle, except for every moment between now and April, because obviously ETH has gone up since then. So that's what I would say. Those are the main strategies: alts to ETH, ETH to Bitcoin, Bitcoin to gold, index funds, or cash, depending on how high the risk levels are for each one.
I can see that. Mine would be the same type of thing. Alts, they're going to be sold off, and pretty much in their entirety goes to Bitcoin. But then I'm debating about Bitcoin because, I mean, if it becomes this strategic reserve like the administration is talking about, or if it becomes some type of major world currency, then it will be hard for me to say, yes, put it into gold. And definitely, as far as like the properties these days is for real estate, not happening. So last question, we got to get out of here. My question was all these crypto bills possibly coming law in the next months, especially with the Clarity Act. I think that's going to go from the House, it's going to go to the Senate. The Senate has to approve it, goes to the president's desk, I think in the end of August 31st or so. But if that actually goes in, could a bill like the Clarity Act become law, make alts more resilient amid the usual bear market losses we get? What do you think about that one? Because it does make sense unless I'm thinking of something different.
Well, I mean, I think even just quantitatively, Bitcoin's bear markets have gotten easier to be on, right? Because like the first one was a 94% drop, the second one was 87, the third one was 84, the last one was a 77% drop. So if we continue along that path, then it means the next bear market won't be as bad as all the bear markets before it. If it's not as bad for Bitcoin, then it probably would be not as bad for alts too. So I mean, it could just be more of like the natural evolution of the asset class.
Yeah, got it. Makes sense. Guy, because this will be right up your alley. I know you guys have been covering this one.
Yeah. Well, I guess I mean, I think generally for alts it would be pretty bad. Although I'm sure Ben's right that it wouldn't be as bad as in the past, assuming we don't have an FTX style event, like we've had in previous cycles, like we had last time. But I think I guess perhaps it will make the case stronger for altcoins that are attached to protocols that have strong fundamentals, i.e. that generate revenue. People that's a bear market scenario. People are still going to be trading, albeit not in the sort of size and the sort of volume that they have been before. But they are still going to be trading. There is still going to be an appetite for borrowing and lending. So there is still going to be an appetite for DeFi. There is still going to be an appetite for earning yield, perhaps more so than in a bull market. And I think projects that can offer something like that, and whose token can give something tangible back to users, with talking things like revenue fee switches here, revenue sharing, and what have you, which is, one of the things that people are getting excited about the Clarity Act should allow, or at least tell us what we can and can't do. That could give us a situation where if a crypto project is profitable and has users and rewards token holders in some tangible way, then they could be much better positioned to ride out a bear market. But I think it would be a case of you'd really see, as usual, who was swimming naked, and all the sort of objectively useless altcoins, which are, let's face it, the vast majority of them, they would get their usual kicking, albeit perhaps, as Ben said, not quite as badly, depending on how Bitcoin performs.
Well said. You know what? A lot of good information today. Guys, I want to thanks again for coming on. This was a great one. Everybody, if you're not following Guy or Ben, which I highly doubt, but if you're not, go give them a follow. Great information on both their channels. But that's it for this week. I believe next week we're on Guy's channel. Hopefully.
Guy, Ben, Rob, Guy. Yes. Yeah.
Yes. Yeah. Sounds good. Thank you. So then we'll do this next week. But everybody, thanks so much for stopping by. We do appreciate you. Follow Guy and Ben. That's it for this one. We'll see you guys next week on Guy's channel. Adios.
See ya.
See ya.